Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He is a chartered financial analyst, also founder and managing director at asset manager Winrock. He adheres to the Austrian School of Economics for looking through the lens of the global macroeconomy and also the U.S. economy for spending. Christopher Casey, thank you for joining me again.
Well, thanks for having me on.
And Christopher, we're recording this interview on Monday, November 11th, 2024. The stock market has rallied a lot since the election results, the election outcome last week. But first, I want to get your thoughts on the Austrian theory of the business cycle and what it's done to Main Street. So if the government and the central bank, if they're cutting interest rates and they're running zero interest rate policy for 15 years, and then the Federal Reserve Bank is rapidly raising interest rates, what type of damage or distortions do you think it's doing to the real economy?
Well, there's a lot, and I think there's a lot we haven't seen as of yet. And to put some numbers to it, typically in a given year, money supply growth may be anywhere from a 5 to kind of 15% year over year growth is typically what you see. And during the lockdowns, it jumped up to 40 for some time. And since then, after that, I'm talking like mid 2021, you had a dramatic drop in year over year money supply growth where it went from 40% or so all the way down over a multi-year period where you're looking at negative 10. Now it's crept up recently, but that's like that's where I think you see the intervention at its most profound and fundamental level is at the money supply. Now we've seen some of the repercussions over the years, right? We saw 2023 last year we had the banking crisis in the spring of that time, Silicon Valley, et cetera. In 2022. We saw the repercussions in that both bonds and the bond market and the stock market were down around 20%. You could argue that was worse than the 2008 crisis, right? Because although equities were down quite a bit more, bonds tended to stabilize people's portfolios, whereas you couldn't escape that carnage in 2022. So I think what we've seen is the Federal Reserve intervene dramatically since the lockdowns. And they seem to me rudderless recently. And given that there's the fact that they're steering anywhere, you've seen the money supply growth come down quite a bit. It's popped up. But as of right now, it's pretty much flat year over year as we speak.
So by rudderless, do you mean that the Fed is making mistakes or they don't know what they're doing, or do you think it's something else?
Well, I think it's all the above. I mean, when I say rudderless, I would say, first of all, their biggest mistake is that they have no philosophical grounding or basis for the actions they take. They like to describe themselves as data dependent, but really all that means is reactionary. They're reacting no different than an animal reacts to stimuli, right? An animal doesn't really have a thought process or a philosophy or an overall plan, but they may react very well or very poorly to various stimuli that put in front of them. And that's what the Federal Reserve does. I mean, that sounds probably shocking to a lot of people. But the reality is these people really don't know what they're doing. I think they are clueless. I think that's reflected in a lot of ways. I think we saw that with the 50 basis point rate cut right before the election. That could have very well been political. I suspect it's because they panicked. But I think the takeaway is whenever you hear data dependent, it just means really we're going to react to whatever the latest data is.
Well, my question then with data dependent is if they're revising the jobs reports down by 800,000 jobs, or the majority of jobs that have been created the last 12 to 18 months are government jobs. And then the consumer price index, most of us who are listening to this podcast right now do not think that the real inflation rate is below 3% now on a lot of different items. If they're using that type of data, I mean, they're going to make bad decisions then, don't you think, with their policies?
Yes, you would think if you're data dependent, so-called data dependent, you would at least have the data right. Now, of course, they're not responsible for data per se. They're relying on other government agencies. But yes, you'd want it to be as accurate as possible and then at least react to that. But the reality is they're really just reacting to the latest data that's put before them. That's kind of how they operate.
And unfortunately, we know with the jobs reports, right, Chris, that like every month or two, these things are being revised like enormously down. It seemed like at one point they were revising the jobs reports down by 100,000, 200,000 jobs each month were just being cut and removed, saying, oh, we overestimated those with the birth death model from the Bureau of Labor Statistics.
Yeah, and that particular statistic you knew there was a problem in the labor market as far as the accuracy of it for a good 6 months before you had kind of the latest massive revisions, because there was a lot of disconnect between various indicators that you saw out there. So it's not like that's it should have been an unknown quantity to them. They should have seen that right away.
Now, do you think that Main Street, so if you're a small business owner, you run your asset management, I run a small business, I've spoken to a lot of other small business owners. I mean, people have gotten killed with the real inflation rate, higher insurance costs, higher labor costs, all these things. If the Fed raises interest rates, it's disproportionately hurt small businesses and Main Street and consumers that are using credit cards that don't have a lot of exposure to, say, enormous amounts of assets with the stock market. Do you think that that caused the Federal Reserve policies and the inflation and then raising interest rates? Do you think that that was led to the election outcomes that we had last week?
That and well, first of all, the answer is yes, because if you polled voters, the economy was always the number one issue. Now, yes, we're maybe not in a so-called crisis mode right now compared to like you'd argue 2022 or to even 2023, but it obviously was of top concern. And I think a large part of that not only is the disconnect between, so-called Main Street and Wall Street maybe, but also just that everyone feels poor. I mean, they just don't believe the statistics. I mean, everyone is dealing with a price level increase that's above 20% prior to the lockdown. So everyone knows the economy's worse off in a lot of ways.
Oh yeah, I totally agree. I call it stagflate tax lie. I mean, like the government is saying they're just measuring the rate of change of the inflation, right, for the consumer price index. So, like you said, the price levels are substantially higher. They're at least 20% higher on a lot of different items, but the government's just measuring the rate of change of the increase. And then they're saying that, oh, the inflation rate, the consumer price index is below 3% now. Then the Fed says, oh, we can cut rates. I don't think excuse me, I don't think that that's why the Fed is cutting rates. I think it might have to do maybe with interest expense on the rapidly growing national debt, because here we are, what, in the last 6 weeks, didn't the government add, like, I think they weren't projected to add another $1 trillion for another 6 months, and they added another 500 or 600 billion in a month.
Yeah. So for fiscal year 2024, which just ended in late September, I believe the interest expense was around 1.3 trillion, and they took in, I believe, 4.9 trillion. So that's a massive percentage overall. So certainly the Treasury Department was arguing for lower rates by the Fed. I mean, they overtly did that, right? Yellen even said that they needed this. I think that was a big part of it, though. I think the other part to the 50 basis point cut you had right before the election was partially politically motivated. That wouldn't surprise me. I don't doubt that. I don't know if it's necessarily true, but I definitely think it's on the table. That's a large part of it. I think they also kind of panicked. I think they're seeing some cracks, and they know everything's not good in the economy. I think they are concerned about next year. And now, as far as the most recent cuts, or I'm sorry, the recent cut they just did right now, 25 basis points, and everyone is predicting another 25 basis point cut in December. That I actually think may be a little bit more politically motivated, meaning if they did cut since they did cut right before the election, they have to make it look like that cut absolutely had to do with the so-called data before them. And so if they keep cutting, it makes it look like this is part of a long-term plan. If they do a one-off cut, 50 basis points, it does look very politically motivated. So I would say, regardless as to the intentions of the rate cut before the election, they've cut on purpose subsequent to then, or will cut a little bit more simply to make it look less politically motivated.
And you also have other central banks prior to the Fed. So the Bank of England, the European Central Bank, other central banks that went into an interest rate cutting cycle too. Do you think that liquidity, if those other central banks are adding liquidity, is it going to end up here in the U.S. stock market? Do you think that that's partially why the stock market indexes are soaring higher lately?
I think the biggest motivation behind the stock market really is the election. And I think we saw this back in 16. And of all people, the current Fed president in Chicago, Goolsbee, I saw him speak, sometime after Trump was first elected back in 16. And he basically said, now he's an Obama, senior Obama advisor, so he's no fan of Trump by any means. But he basically said, look, and it's not a shock that the stock market's up big, because everyone knows, and this happened within a year, that Trump wanted to cut taxes significantly. And if you just kind of do the present value of those tax cuts, that kind of equates to what we're in right now, as far as a what I would call kind of a mini bull market. So right now with the market reacting the way it has, and by the way, I'm surprised it didn't react more strongly before the election because I think the indications were pretty clear that Trump was going to be elected, from what I've read and from what I saw. I'm surprised things didn't move more quickly beforehand, but regardless, I think right now we're in what I would call a state of execution. We have a little bit of time right now before things really fall off or get off the rails, and there's a lot of reasons we could think that. Number one is the debt crisis, I think, that is fast approaching. And part of that's because most people forget this, but the debt ceiling was suspended back a couple of years ago. Now that suspension goes away on January 1st of 2025. So it's fast approaching. And it's an odd date, too. I always thought that was an odd date they picked because it's 2 days before the new Congress is sworn in. It's obviously before the new president is sworn in. So you're going to have a crisis that's fast approaching because I think the debt ceiling, when they suspended it, was around, it was like a low 31. So let's call it like 31.25 or 31.4, something like that in the low end. Well, we're at 36. We're probably going to be at 6 by the time you put this out on the air because we're at like 35.99 right now, as far as overall debt.
It's ridiculous. I think the Congressional Budget Office, in their estimates, they're claiming that we won't get to 40 trillion in the official national debt by like 2033. I mean, there's just no way we're headed on that pace in the next 2 or 3 years.
Oh, I totally agree. And, I never quote CBO projections or even Fed projections because they're always completely inadequate and inaccurate. They use these, static models. So for instance, if the CBO is projecting this is why everyone kept saying that Trump was going to have a bigger deficit than Harris, because the CBO comes out, they look at various proposed budgets, and then they say, oh, Trump's got a tax cut. That's going to diminish tax revenues by this exact amount without taking into account any other repercussions, such as economic growth and therefore more taxes from tax revenue from growth. So they're inherently inaccurate with everything they put out there, and their track record's absolutely abysmal. One thing I'll say, especially about the Fed, the Fed predicts a lot of different things. They'll have, annual projections, what maybe GDP is. They have projections, the dot plots, as to what interest rates, short-term interest rates would be. That's something that's like literally underneath their thumb, and they still get it wrong. So they're something that's like, it's shocking. It's under
comical.
complete control.
It's comical.
Yeah, it's like if you told me whether or not I'm going to go stop at the gas station on the way home tonight and fill up my tank. That's under my control. Like I should predict, yes, I'm going to, and then I just, it doesn't happen. I mean, this is under their control, and they're wrong.
But in the real world, you run out of gas. Here in DC, you might even get a promotion for being wrong all the time, as long as you toe the party line and you don't rock the boat with any of your bosses or the political appointees above you.
That's true. And obviously, if you fail, you get more resources.
Well, or you do consulting work for a hedge fund like Janet Yellen or Ben Bernanke when they go to the private sector briefly, or they end up in academia and they collect another pension as a professor at a university.
Yeah, what's probably the worst example of that, it's literally laughable, was Lori Lightfoot, the former governor, or I'm sorry, mayor of Chicago, who went to become a so-called Harvard professor. And I think it was something about, public health was the her area of so-called expertise. When by any measure, both from a liberal perspective or conservative perspective, if you really thought the COVID measures were reasonable or not, she is a disaster and a hypocrite, right? But yet she's still rewarded with a Harvard prestigious appointment.
Well, it's a revolving door of corruption. But I mean, a lot of these endowment funds, like they have losses on these credit pools, commercial real estate. These things are being hidden. They're not like a publicly traded company or a bank where they have to mark to market losses. So I think there's a lot of losses there with these endowments and the pension funds right now that are currently being hidden.
Not just that, I think that's economy wide, right? You have that everywhere from private equity firms with their portfolio companies. You have it with commercial banks. with their real estate holdings, right? A lot of that has not been marked to market, right? You have banks with their treasury holdings, right? Remember in the crisis last year, a lot of them just, and you can see the statistics, it's staggering, where they moved them to hold to maturity, so they don't have to report the fair market value of these assets and therefore the losses they had on them. So you see that across the board a lot. It's the old 2008 lend and pretend, right? They are ignoring the problems that exist.
Yeah, and I think I just saw an article that the commercial real estate losses on the mortgage-backed securities for commercial real estate and some of the other loan losses are starting to grow again, even though the Fed is in a rate cutting cycle. The mortgages, the interest rate on the mortgages, Chris, I think they temporarily went down during the 50 basis point rate cut a month ago, but then they've started to rally. I think we're back above 7% for a 30-year mortgage, so they've stayed stubbornly high.
That's right. And I think, in fact, now that you say that, I'm kind of curious because obviously the Federal Reserve is a major holder of mortgage-backed securities. I'm curious as to what their losses. They must be fairly staggering.
Well, those are residential. I don't think they've started buying commercial real estate ones yet. At some point, they might have to, though.
Yeah, well, that brings up another point too. Historically, everyone said, well, the Fed can only buy certain types of assets, mainly treasuries. And then when the last crisis happened with the lockdowns, they went ahead and they were buying. You had Heinz corporate bonds were being purchased by the Fed, and the Fed got around it by saying, okay, we're not buying it. It's this XYZ holding company. We're just giving them funds to do it. Oh, and we also run that holding company as well. But legally, we're not
Are
technically
you talking
doing
about
this.
the special purpose vehicles that the Treasury technically owns and the Fed funds?
Yeah,
Because there was like a legal loophole, I think that was changed in 2020 or 2021. They did the same type of shenanigans with the goalposts moving and the rules changes in 2008 because wasn't it illegal back then for the Federal Reserve Bank to buy mortgage-backed securities then? And they're like, oh, okay, we'll just change the law so we can go buy trillions of dollars of mortgage-backed securities.
or have some entity do it and they just lend them money. I mean, but that would be a great area to really rein in the Fed is changing their so-called mandates. But ultimately, I think that the best thing they could do is just really limit what they could buy.
I wish we had disciplined government. I think, unfortunately, things are heading the opposite direction. I mean, the current administration that's in the White House now, in the State of the Union speech, he was bragging about ignoring the Supreme Court and moving funds around from one government agency into another to do student loan debt bailouts. And we have like 150 billion at least to student loan debt bailouts, and they don't make any sense because the people that were making their payments, a lot of them didn't get the student loan debt bailouts. It would seem to be randomly given out.
That's true. And this digresses a little bit from the kind of the financial purpose of your podcast, but I would say probably the most disturbing things that I've seen happen over the last couple of years since the lockdowns. And there's been a lot of disturbing things, right? A lot of things have gone awry, but two things have happened which I really never expected to happen in my lifetime in America. And one is that I think the freedom of speech, which for the most part throughout the American history has expanded, is really in jeopardy. It's really disturbing what's happening. And I'm going beyond just the outright censorship. I'm talking about weaponized defamation, that kind of stuff. That's one area. And the other area that's really disturbing, like you're talking about explicitly, is the lack of the rule of law, whether it's the enforcement or the adjudication, what have you. But I mean, that's something that's diminished greatly over the last couple of years, and it's scary. And that brings you to, I think was it Robert Higgs with the Austrian economists talk about regime uncertainty, right? You can't make decisions when the law is changing or the law is not enforced. And it's the same thing we saw. Um, and he was writing about that, a long time ago. But we saw that too. That's the whole reason the Supreme Court and any kind of appellate court, has the concept of stare decisis, like let the decision stand. They don't address recent case law because they can't have case law changing all the time because they don't want laws changing. They want some certainty out there. That's why they rarely address something until it's been some time, a particular legal issue. But yeah, those two trends I find very disturbing, and I don't see. I don't see a permanent end in sight. I do see a reprieve over the next 4 years. I do think that will happen, but they are disturbing long-term trends.
Yeah, I agree. And it's basically desperate banana republics, and the U.S. is an enormous, it's an empire. But here you have their playbook is very similar to a third world country, developing country, banana republic, with all the constant rules changes. And that's, I think, why, Chris, you have foreigners, especially foreign central banks, they're not enormous net buyers of U.S. Treasuries the last couple of years because of the Russia sanctions and the massive budget deficits from both political parties and the White House out of D.C. That's why they're buying gold tonnage, and then that's also why regular people are looking at the stock market, the private sector, or things like gold and Bitcoin.
Yeah, I agree. And I wish we were, I think we'll look back on this and think, man, I wish we were a banana republic because certain banana republics like El Salvador have done a lot of great things, right? They've cut crime dramatically. They have a debt issue, not nearly as bad as the United States, but they have a debt issue. And yet they already have, I think, around 10% of that debt could be met by their Bitcoin holdings, right? They have their own kind of sovereign fund with that. So um, hopefully we're not looking at the days and thinking, well, man, I wish we were Banana Republic could be better. But there's a lot of disturbing clouds on the horizon.
Well, I mean, a lot of evidence of Banana Republic with the censorship, cancel culture, going after political opponents, whichever regime is in power goes after the other political opponents, either jailing them or kidnapping or other stuff. So, I mean, like, there's a lot of disturbing trends about that it is a Banana Republic, and then you add in the fact that the U.S. has the world reserve currency, and we're just abusing it because the people here in D.C. I mean, like, no one's talking about cutting spending; it's the opposite, in fact.
That's true. And I guess, one thing we can take some comfort in is I'm surprised things weren't worse over the last 4 years. Meaning, I'm actually kind of surprised they didn't pack the Supreme Court. Now they wouldn't call it that, right? They probably do what Roosevelt did along those lines, where you'd have at a certain age, you just get to appoint a new justice, because frankly, that's something they could do. I'm surprised they didn't make Puerto Rico a state or pursue that. There's a
There,
lot of
there
things
was
they
the Republicans still had enough seats in Congress to block some of this stuff, so the Democrats like mostly just wasted trillions of dollars on a lot of their programs and moved funds around. So that was a lot of the stuff that was going on. There was still enough Republicans in Congress to block some of the stuff you were seeing, though.
thankfully that's true. And not only that, but even when they didn't have the Senate, the Republicans didn't have a Senate. The Democrats really didn't have the Senate either, right? So you're right. I'm just I guess, a little bit surprised that at least the radical wings of the party weren't really pushing this. It wasn't on the agenda. It's just not something they seem to address. I mean, don't get me wrong, they did plenty of damage, but the stuff they could have done that really, I'd say, cemented their power never really happened.
Well, I think we're basically at a law of diminishing returns with all the government spending and stuff. Because like the budget deficits, I mean, base case, are you projecting like $2 trillion budget deficits going forward, or do you think that like Trump's gonna be able to slow things down?
Well, 2 trillion certainly sounds like the base case, right, going forward, of what you would expect. And it doesn't need to be that way. If you go back to 2019, right, the last like clean year we had before all these distortions caused by lockdowns, they probably brought in just shy of 4 trillion. I think it was like 3.6 trillion in revenue, and expenditures were like 4.5, right? So there's a deficit, but it wasn't crazy. Now, Trump was, everyone knows he was recently on Joe Rogan. And one of the comments he made there was that he thought in the last year of his administration, they were actually going to be able to cut into the debt by having a surplus that year. Now, whether or not that's true, I'm, a little dubious about. But the fact is, they weren't that far away. And in fact, if you cut spending right now just to 2019 levels, right? If you brought it down there, we would have a small surplus. So you don't really have to cut all that much. There's no reason that all of a sudden expenditures are up a third since the lockdowns, and it has to permanently stay that way. But unfortunately, I think it may be.
Yeah, unfortunately, I think things are heading the other direction. I think even the Republicans now are talking about like military upgrades and infrastructure. I mean, we sorely need infrastructure. It seems like Congress passes an infrastructure bill every couple of years since I've lived here in Washington, D.C. the last almost 25 years. But the funds get wasted. I mean, the roads and bridges and all the key things you need to run an economy on the ground, like actually move goods around. It seems like that infrastructure is not being improved, but these infrastructure bills still pass anyway. like every couple of years.
Yeah, and here's what's disturbing about infrastructure spending. As far as I could tell, all that's been spent really in infrastructure is two things. One, a whole bunch of green initiatives, right, that may or may not be economically productive. But the very fact that you have, I find this shocking, and I think people are going to laugh at us centuries from now. But you actually have massive plants that are like sucking carbon dioxide out of the atmosphere in so-called sequestering it. I mean, I think we're going to be laughed at for that. And the other thing is, as far as I can tell, infrastructure is that the roads don't seem better, bridges don't seem better. I don't think ports are better, airports aren't better. But you know what is better? Every sidewalk now has that little bumpy thing on the end, so you know when you're walking that you're going to hit the road in a minute. Completely unnecessary, but that for some reason we have that everywhere. It's like, apparently all they spent money on.
But if the major roads and the train tracks, we have an upgrade. I mean, we should have bullet trains and all those nice things already that the other countries in Europe or China already have, or Japan, and we don't have any of those things. It's like I think California spent $80 billion building a small amount of bullet train for maglev.
Yeah, it's not that difficult to have that type of instrument because, frankly, there's a demand for it. The people want it. Consumers, businesses need it. I was in Portugal. I was just came back from London a few weeks ago. I mean, they have comparable things to, maglev trains or high-speed trains. They've got a great infrastructure in that regard, much better than what we have. So you're right. We have occasional infrastructure bills. I don't know what they're spending on the money on, but it really shouldn't be that difficult.
They add pork into there. So it's like what Ron Paul says with the marketing. So it's like if it's a Patriot Act or the Inflation Reduction Act, now it's Orwellian. Basically, it does the opposite, and they stick. I would say over 50% of the spending in the bill is stuff the lobbyists have snuck in there that has nothing to do with what the bill was intended to do now. This is how bad things are here in the Washington, D.C. metro area.
And I don't even know if they're sneaking it in, like giving a suggestion as much as they are here's the actual language we want you to stick in there, right? And they just
The bills
wholesale
like
take
the
it and dump it.
Patriot Act was good from what I heard. The Patriot Act was already written, and some of these other bills, like the lobbyists, have already written the bill. So then the politicians, like some of them, maybe their aide reads it, but the politicians who are signing it into law don't even read it because they know that they're going to profit from it, or their friends, their political donors, or they have like the revolving door of corruption. They could go get a seat on the board of directors when their political career is over.
Or they're browbeat into it, right? That's what Pelosi was saying. We don't have time to read this, right? That was
Well, why
literally what she
doesn't
was
she
saying.
have time to read this? Is it her stock trading, her options trading, or is she going to political fundraisers? I don't know why she doesn't have time to read the bill because that's what her main job is. She's earning her base salary is only 180,000, but she's worth over $100 million, hundreds of millions of dollars.
Yeah, it's kind of like me telling clients I don't have time to manage your money. I mean, but really that's your actual business, right? That's her
Yeah,
business is to
yeah.
pass laws and know about the laws, right? So you're totally right.
I want to ask you, which sectors or industries do you think will benefit from Trump being president compared to maybe Kamala Harris?
Yeah, and I think we've already seen it in a couple regards. So number one, we've obviously seen a big explosion in Bitcoin, right, over the last week or so. And granted, having JD Vance as part of the administration should be extremely beneficial for cryptocurrencies in general. Now, Trump kind of took a more longer route to get to that position because he was dismissive of it a couple of years ago, but he's really embraced it over the last year, especially with JD on the ticket. Um, so we've already seen a pop in that. I don't know how much of that is from a so-called regulatory expectations, meaning they'll clean up the regulations about it. There'll be less uncertainty, less hostility, versus I suspect, and Trump's hinted at this, that maybe they're looking at having like kind of a sovereign fund, like I mentioned, El Salvador does, where they put away Bitcoin. If they did something like that, you could have a rush to the exits where other countries are doing likewise. And frankly, they're probably already doing it because they're obviously doing it with other hard assets like gold and silver. But I wouldn't be surprised if there's a rush to cryptocurrencies. So that's one that I think was there. There's some other obvious ones, and I think there's still time. They haven't gone up all that much even since the election. But when you have a president that comes out with his acceptance speech and says, "We're going to drill, baby, drill," and we're going to make the America an energy superpower, and already is, but even more so, then I'm a little surprised we haven't seen a bigger uptick in, for instance, oil and gas stocks, especially natural gas, right? These guys are, you had, whether it was because Biden was angry at Texas or what have you, but they stopped, they suspended all licensing for natural gas exports. Well, there's a new sheriff in town. I wouldn't be surprised if natural gas domestically, the price rose quite a bit because Trump's going to promote exports. That's another area that is probably worth a look by investors. So you got that, you got crypto, you've got things that I think should do well regardless as to Trump's policies. So really, regardless as to what Trump does, I think we're looking at a legitimate solvency crisis in the United States. And by that, I mean, there's varying degrees of what I mean by that. But at the one end, you could say it's an existential threat to the United States as a whole. When you have 36 trillion in debt and taken five, they'll never be repaid, but for you inflate your way out of it. And so I think any inflation hedges make sense over the next, not just 4 years, probably the next decade is something everyone should have a good portion of their portfolio. By that, I mean, real estate that's got tenants, real estate that's using leverage wisely. I think farmland. I think any company that's exporting goods or services is an inflation hedge. Obviously, monetary alternatives like gold and silver, cryptocurrencies all work. So there's a lot of things I think will do well regardless of Trump policies. There's a couple of things I think would do very well because of what he's doing.
Yeah, I agree about liquefied natural gas exports. I mean, if he does allow more permitting for oil and natural gas drilling, that may actually keep the domestic prices here low, but that would be good for consumers and good for the economy in the long run, that we're not paying higher energy prices. But then if the domestic prices are cheaper, there's a profit opportunity to take the cheaper natural gas and move it via pipeline to a liquefied natural gas export facility and sell it at a large profit in another country.
Yeah, a lot of people, I guess, don't realize that there's significant price differentials for natural gas, unlike most commodities. And by exporting it, you obviously lessen the so-called domestic supply, which all things being equal would argue for higher prices. But you're right. Once he does that, you're going to have a massive capacity build out. You're going to have much more supply brought online overall, because we know we have the reserves. It's just a matter of turning it into profits.
Now, do you think if the Federal Reserve Bank and maybe Trump pressures them and puts in a new Federal Reserve Bank chairman during his term here, do you think that if they start to reduce interest rates, is that going to help like the small cap companies? Do you think that that's why they've been rallying lately?
That is the what I would say is the typical viewpoint. Everyone, and we've seen it. They've rallied quite a bit. They've rallied the day after the election. I think about double what large cap stocks did. So, yeah, a lot of people do believe that. In the theory is that they're a little more constrained on the different sources of capital that they could access, and so therefore lower rates just help them more. However, when you look, I would suspect that if you look at all the so-called zombie companies between small caps and big caps, there's a lot of them in both areas. And so, yes, it'll probably help small caps more than overall than large caps, but there's a lot of damage, a lot of liquidations that should happen, which just haven't happened. It'll probably be suspenders staved off by lowering rates.
And with Austrian theory of the business cycle here, Austrian School of Economics, all the distortions the Federal Reserve Bank and DC spending has caused with the boom and bust cycles that are artificial, not by the free market. I mean, there's a lot of losses, like Chris and I were discussing earlier with commercial real estate, with these regional banks. I think insurance companies have a lot of losses with these office buildings that don't have cash flow in them. So they have a lot of losses there too. And then on older US Treasury bonds as well.
Yeah, it wouldn't surprise me. I mean, the way that could play out is with annuities, right? A lot of people think annuities are super safe, they're guaranteed by insurance companies. Well, when you have literally a decade or two of the way you do pension accounting, where you have what you're booking as far as what your normalized rate of return is and what you're actually earning, there could be a lot more underwater than we know about. You're right.
And these are distortions. So I think we're going to have, immense problems in the real economy here based on all the policies the Federal Reserve Bank has doing. I mean, things seem well right now, Chris, with the stock market, with the rally beneath the surface in the real economy. I think the election results dictated that things are not as good as the stock market indexes in the United States indicate because the major election issue was what inflation, higher interest rates on the consumer and small business, and that hurt the real economy. So you have what the stock market is saying, and that's what people in DC, what the Federal Reserve Bank and the people that go on TV, what from the government, they're saying, oh, look at the stock market index. Well, the voter just said we voted for the economy.
Yeah, I think there's two things going on. One is certainly that, right? That you can have any kind of beneficial statistic about the economy you want, but people, are living their lives and they don't feel that way. They don't experience that. They're experiencing higher prices. It's very difficult, especially for, poorer Americans. That's absolutely true. The other aspect to the election, I've said for some time now, if this election was over, Biden was told probably not to run on, I believe, July 21st, right? So Harris had basically, I think, 14 weeks to campaign. And if it was 10 weeks, I think she may have won. But that extra 4 weeks was just long enough, in my opinion, to expose herself to get for people to really know her and to at least know enough that she couldn't really answer a question effectively. Now, think about this. Everyone knows about this, but Harris dropped out of the 2020 primaries in December of 15, right? Well before they had any primaries. I'm sorry, December of 19. Well before they had any kind of well before they had the first primary. And there were 14 people. Here's what people don't realize, but I think is even a more powerful statistic. There were 14 other individuals who dropped out after her before Biden was nominated, right? Like most people couldn't name who these people were today or where they are. But you can look up some names and you're like, oh my God, I forgot that person actually ran for president. Oh my gosh, that person actually lasted way longer than Harris. So I think ultimately the election, yes, the economy was a major, major issue. And I think it was going to be even bigger if we did it, a year or two ago, if that was when the election took place. But I think ultimately this election is that it was an extremely deficient candidate that was put up.
Yeah, it was a disaster for the Democrats because I mean the Republicans got a lot of the votes that they were counting on with like the union workers and minorities. I mean, like just seeing like you're in the Midwest, you're in Chicago, Chris. Like almost all the states surrounding that were the battleground states, Trump won them pretty clean.
Oh, absolutely. And that it was nice because that election night was, in my opinion, over, before they called it quite a bit. Uh, you're right. Illinois is an outlier in that regard. And it wasn't always that case, unfortunately. Growing up, we used to have a split kind of senatorial platform, one Democrat, one Republican. We used to have typically a Republican governor. We've had for years. We did have one a couple years ago, but it used to be pretty common. And the state representation, I'm sorry, the district representation in the House of Representatives used to be a lot more beneficial than it is now. So yeah, we're a bit of an outlier in the Midwest.
Do you think then in the current system with the amount of debt we have, are the people in power, the Federal Reserve Bank, both political parties in DC like Congress, are they going to allow deflation for a long period of time? Or do you think that we're in like an environment now where government's going to get more and more desperate? There's going to be more and more intervention, more stimulus programs, and they don't care if they debase the currency. Do you think that that's like the game plan?
I think it is. I definitely think it's the latter scenario. The I'm a little surprised how quickly and dramatically and the duration as far as how long money supply not only was reduced but went negative and stayed negative for some time. And like I said, that's reversed to a degree. We're basically flat now. There's a delay in reporting things, so we really don't know. I think the latest month we have is August, maybe September. I think it's August. And so, but simply because of the fact of how the debt situation is, and it doesn't really matter who's in power. I do think that's the playbook: debase the currency, prop up government finances, and pay down the debt with depreciating dollars. That is the game plan. And part of the reason we know this is that look how they act, both parties. Look at the fact that we don't even have a real budgetary process anymore. You know, it used to be where you had the president would propose something, you'd have these various, resolutions, then we'd have 12 appropriation bills. Not only is the timing way off, but they just don't even do this stuff anymore. It's all, continuing resolutions where they basically take the previous year's budget for a sector of the government and extend it for another year. They're suspending the debt ceiling. Everything they do indicates that they don't care about fiscal responsibility in the least bit.
I mean, Elon Musk is talking about what cutting $2 trillion with the government efficiency department or something like that, and Trump might appoint him there. I'm going to be very skeptical that he's going to be able to cut anything even close to that, given what I know about Washington, D.C. with the government employee unions, the lawsuits, how difficult it is. I mean, you have both political parties in Congress fighting spending cuts like that.
I agree. I think that's a pipe dream that's not going to happen. Now, it shouldn't be that difficult because, as I mentioned before, all we have to do is get back to 2019 expenditure levels, and you're looking at a surplus, right? That sounds great. Um, but part of the problem is that it's not government waste that's the problem. I mean, government waste, of course, is a problem. It's unnecessary, what have you. But the real problem is that these are directed, specific, purposeful appropriations. And unless you're tackling entitlements, you will never, ever, ever cut budget expenditures, no matter how much waste is baked in there. It's nothing compared to the purpose of these programs.
Well, on top of that, now you have the calls for upgrades in military spending, and then you also have the interest expense, and no one was counting on that level of interest expense. I think the projections only a year or two ago were around 300 billion a year of interest expense, and here we are. It's $1 trillion more per year added to that. It was base case is 1.1, 1.2 trillion per year of interest expense now.
Yes, and that's one area that can really get out of control very quickly on a budget. Um, for a couple of reasons. You could quickly have a spiral where it's not just interest rates that need to go up, it's the actual overall debt that goes up, where you have increased interest expenditures. That's very likely, probable, and that's what we're going to see here fairly soon.
And for our listeners out there, the comparison, the analogy here for regular people, a family or an individual, is if you only make the minimum payment on your credit card balance. So this is what's happening to the spendthrifts here in both political parties in Congress, is if you keep spending and spending and spending and you only make the minimum payments on your credit card, I mean, it just gets out of control. And finally, it looks like we've hit a tipping point here. The other issue, Chris, is the supply and demand for treasuries post-Russia sanctions 2022. These foreign central banks outside the G7, they are not large net buyers of treasuries. China and Japan, I think, are net sellers, but a lot of the other G7, they're not buying massive amounts of treasuries anymore to subsidize those budget deficits like they have for decades with their trade surpluses and foreign exchange reserves. The last 2 years, they're buying basically double the amount of gold each month with gold tonnage that they have in the past.
Yeah, it's absolutely true. And your comment about paying the minimum on your credit card is perfectly apt. It's no different than if someone had a $50,000 job and they had $360,000 in credit card debt. It's never going to be repaid. I mean, those are the actual numbers. It's no different than what the federal government has, except that person doesn't have a printing press, right? Like the government does. And also, over the last, well, for decades now, foreigners have absolutely funded U.S. government debt to a large degree, and they've walked away from it, rightfully so, because they don't want their assets seized or what have you. And when you do that, the Federal Reserve, more than ever, is really the buyer. It's going to go from the buyer of last resort to the buyer of first resort, is what we're looking at.
And we've had a gold price correction a little bit because of the Trump victory. I'm thinking it's going to be a temporary correction here over the next couple months. I'm thinking gold's looking like, and the gold stocks that are going to be making free cash flow at these gold prices, I'm thinking it's looking like a buying opportunity here going forward.
Yeah, you can make an argument that, well, first of all, it hasn't sold off, obviously that much compared to the fact over the last 5 years, if you looked at the lows, it's probably up, I don't know, 75% or so, where silver's up much, much more. It just had a much lower low in 2020. So it's really come back even more. It's probably about double the type of return. Um, I'm actually surprised. I'm not so much surprised that it sold off. Um, I'm surprised that it hasn't been bid up more over the last couple of years. It's had a great run, but the writing's on the wall. Everyone sees what's coming down here as far as the solvency crisis. So I'm actually surprised precious metals haven't run up even more to date.
I actually have a chart here. I saw this on my financial Twitter feed. Someone did a great chart here when the last time Trump was in office. So when Trump took office in 2017, in early 2017, the gold price was at $1,153. And when he left office in 2021, January 2021, it was $1,848. So basically, it was up 32% before the pandemic, and then it was up 60% more to nearly $2,000 an ounce. So, I mean, the Trump presidency, what he runs kind of supply side economics budget deficits. I still think it's going to be inflationary. The market didn't see that initially, but I think, as things play out the next 6 to 12 months, I think the market's going to figure out that he's going to be spending too.
Oh, I think so. I mean, there's a lot of the military's a big one, but it's modernization. I guess the only thing that would offset it is if you're not sending, $200 billion over to Ukraine, which could help offset any kind of increased military expenditures overall. But you're right. I mean, it's not even part of the political discussion about taming the budget. I mentioned he was on Rogan and discussed that he thought they would have had a surplus back in 2020. I'm shocked he even said that because it doesn't even seem like it's a big issue for voters, and it's certainly not an issue in DC.
Well, I think DC doesn't want a balanced budget. I could tell you from speaking with lobbyists and defense contractors, a lot of people are no one here wants a balanced budget. They all have like their spending programs picked out. They're thinking like the government spends more. How do I redirect those funds into my bank account or make money off the stock trades based on the increased amount of government spending? That seems to be the mindset around here since 2008, I would say.
Yeah, and the quickest thing to get rid of that would just be a line item veto. I remember the last time I heard a president talk about that, I think it was Reagan. And I could be wrong, maybe the other ones have, but and I think Reagan was correct. I believe he thought that you don't even need a constitutional amendment to have a line item veto. It's actually exists because you're never supposed to have legislation being put forth from Congress that has, these omnibus bills with, all these different provisions. It's just not the way it was supposed to work. So that's something that would solve that immediately. I wish we started talking about that option again.
Unfortunately, things are headed towards like financial history, like all the empires that went bust with currency debasement and financial problems with the British Empire, the Roman Empire, and a lot of Chinese dynasties. So, I mean, we're headed there with waste, fraud, corruption, and abuse. Things are headed in the wrong direction with both political parties and the spending.
Yeah, and a lot of those empires, and you can also say the same exact thing as it relates to, reserve currencies, currencies that were widely used throughout the years. And there's been a lot of commentators that have pointed this out. But, they all have kind of a 200-year type window they typically exist. It was true of Rome too. I mean, Rome lasted a lot longer, especially if you count the East. But the reality is it ceased being a real factor on a geopolitical scene and otherwise after around 200 years.
Yep, and I mean they debased the currency a lot. So like what they clipped the coin, so the average person didn't notice for a while. Like, they played all these games. They dipped copper in silver to make it look like it was still a silver coin. So I mean, governments play lots and lots of games with the money supply.
Well, the U.S. Treasury does the same thing with coins right now. So you could look at the change in metallurgical content over the years, and obviously we had silver for a large number of years, but even now, to your point, the penny just has this patina of copper on it. I think it's mainly zinc, and that bought them a little bit of time. But then zinc prices rose a number of years ago, and then all of a
Oh,
sudden,
what are we switching
yeah,
to next?
right. What were we doing? Can we do plastic? What are we going to do to now? Because
Copper color
the,
plastic, yes.
yeah, there was a shortage then because I don't know if people that's why it's illegal to smelt down coinage, right? Because they don't want people doing that because there was a hedge there, or I'm sorry, an arbitrage opportunity where you could literally smelt down various coins and they'd be worth more in bullion.
Well, I mean, that was happening, right, with the junk silver, but now like junk silver is kind of a collector's item to some people. So,
Yeah, now we call it junk zinc.
Well, it just shows you that like it's the old Milton Friedman quote, right? If the government was in charge of sand in the Sahara Desert, eventually there'd be a shortage.
Yeah, that's it was as much issues that I have with Friedman that he's absolutely spot on with that.
Yeah, I mean he was anti-gold supposedly, right? So he created what the payroll tax, and then he was anti-gold with the gold standard, and then he blamed what a lot of the 1929 depression on the gold standard. I think the white paper that he wrote with the other economists.
Yeah, he was. I mean, there's a lot of issues, like I say, whether it's methodological, but certainly some of these policies. By the way, it wasn't just, for instance, withholding, as you mentioned, which he actually came up with and proposed. There were other like really bad ideas overall. So, for instance, right now we talk about I know I'm blanking on the term. What's the term when they talk about having just um, a flat amount of welfare, just like a stipend? I forget the term for that. It was big in the last election because that one
Universal basic
gentleman,
income, are you talking about?
yeah, basic income. So
UBI?
yes, you may remember Milton Friedman, actually. I think this is in his book, Freedom and Capitalism. He was a big proponent of what he called the negative income tax. And it's basically the same thing, right? It's that universal, but just diminishes, as you increase your own income. So he had a lot of bad ideas. He had a faulty theory of, business cycles. And one of the things on gold, I remember he was in this debate, and I can't remember the gentleman he was debating. But his point about not accepting a gold standard was that it was a wasteful activity to dig gold out of the ground and then stick it in a vault. And he thought it was more efficient for the economy if we just had a disciplined Federal Reserve that would just produce dollars at a uniform rate, a constant uniform rate. That's really his biggest argument. And of course, Rothbard or someone else on the Austrian side would point out the fact that it is what you argue is not a wasteful but an expensive enterprise is the reason it keeps the money supply in check. And so, yeah, Milton had did a lot of good, but had some bad ideas as well.
Well, yeah, I think he was talking about money supply growth with population growth here in the US, but then like the amount of immigration the US has had, like the supply growth they would justify enormous money supply growth based on the immigration that has occurred. So that wouldn't
Whatever
make
thought,
any.
but yeah, maybe Biden's a Friedmanite. Yeah.
Well, it would create distortions too. So, I mean, like he was claiming that, like, I guess back then when he was writing some of these theories out, there wasn't as much, crazy amounts of immigration that was occurring back then. A lot of it was legal or migrants went back home to their countries. But, I mean, now, like, it's just gone out of hand the last couple decades with,
Yeah, and I mean,
especially with all the social payments. I mean, like, look, I have no problem with immigration, especially if it's legal. But, like, if they're gonna, I think there was like, they were handing out like insane amounts of extra funds that was being printed. I don't think there's any way to account for it.
yeah, and you're right. There's no way to account for who's coming in.
Well, I mean, also like all the stuff they were getting, like the state of California was giving like healthcare and guaranteed application to a University of California school system. So if you were a California taxpayer, you had no benefit to paying your taxes, Eric, because like your kids weren't being given spots at the University of California school system for paying the taxes in the state. It just made these policies make no sense.
Well, it's not uncommon for me to see a homeless person and they may have a nicer bicycle or a nicer phone than what I have.
I guess, yeah, one or two things here or there, but I mean, like, if you're doing it over thousands of people or millions of people, then it's makes no sense. It's inefficient. You can't keep running your economy that way. The central planning is going to bankrupt the treasury, or they're going to print the money, right? So they're going to stagflate, tax lie, or debase the currency at a rapid pace if they're going to have policies like that, where thousands of people have better iPhones than you, but they don't have a job.
And thus, that's where we're at today.
Welcome to dystopia, my friend. It's a disaster. Hopefully things will be cleaned up a little bit, but unfortunately, I think like if the wrong politicians come back into power, they're just going to reverse a lot of the policies. That's kind of like the narrative here is that like, well, Trump won the election, and we're just going to wait this out another 4 years, and then they're going to go back to the same policies. I think that's like the attitude here in DC.
Yeah, and that's why everything he does, and maybe he didn't do this the first time because he expected to be reelected and there's just more time, right? Maybe having a non-contiguous second term is kind of a blessing in a lot of ways. Maybe he could really try to make these cement. He could really cement some of these reforms out there because the last thing you want to do, like you're saying, is have a new president take over that's on the opposite side, or even a different Republican. It theoretically could happen. And day one, they're just signing executive order after executive order, reversing about a lot of things. You got to make a lot of these acts of Congress and really cement them in U.S. code.
Yeah, I mean, the attitude here for a lot of government employees, if they don't like who's in power in Congress or the White House, is, well, we'll just wait them out. And as soon as they're gone and the politician we like comes back into power, we're just gonna, do a 180 on the policies we didn't like. Unfortunately, that's the attitude around here, and it just gets worse. I mean, like, the amount of stock trading, the amount of waste, fraud, corruption, and abuse here in the Washington, D.C. metro, we are seeing the Cantillon effect, Chris. I know you're a fan of Austrian School of Economics. This is like the Cantillon effect the last 15 or 20 years with all the quantitative easing funds, zero interest rate policy. And that's why Washington, D.C. metro area, we have, I think, 5 out of the 10 richest average median family income counties in the whole country.
Yeah, that, and I just saw a different statistic, which I think ties into this. It was highest by dollar amount wine consumption in the US demographically. Where is it? And DC was like off the charts. And it's from all these lobbyists, steak dinners that they're doing. I'm sure that's a big part of it. That's why I love what Trump recently put out with his, I can't remember, it was like 10 different points about whether it's a cooling off period before you go into the private sector, what have you. But I really like the fact he recognizes the deep state's a problem. He's trying to tackle it head on.
Well, I'd like to see legal laws where the people in Congress can't sell the information or make the stock trades. But unfortunately, that's like, one of the perks. And that's how you have someone who comes to Congress here and they have like 200,000 in student loan debt or like a small net worth. And then under 10 years of Congress with only 180,000 base salary. I mean, there's rumors that AOC is worth over $10 million already, and she's only been in Congress 6 or 7 years.
Yeah, well, you saw that with Harris too. And that wasn't all federal government per se. It was a lot of California, but you saw that where she had, going from a lowly kind of San Francisco city job to being worth millions and having, you just track her income tax returns over the years. You saw the same exact effect. I mean, it's nothing new in Washington, but I think the magnitude is far larger than it's ever been. And in fact, um, Vivek actually that was one of the ways he destroyed Nikki Haley, right? He called her out and said, "How do you go from essentially being bankrupt to being a multimillionaire?" And it's no coincidence you're on all these board of directors of defense stocks.
Yep. And I think a lot of this really, it took an order of magnitude, like a huge leap forward with the bribes and the payoffs and how wealthy the people in the DC metro area, especially Congress or friends and family members related to people in Congress, got post 2008 with the zero interest rate policy and the quantitative easing. Because then it seems like, Chris, like the government budget deficits and the spending, it went absolutely bonkers the last 15 years.
Yeah, well, like I said, the revenues after lockdowns, or I'm sorry, expenditures after lockdowns are up a third, right? And they're never going back down. It's a new permanent plateau. They're only going up from here. So, spending 6 to 7 trillion a year is the new norm.
And I think the last like 2023 it was around 8 trillion or something, or actually like I think like fiscal 2025 they're projecting 8 trillion. So you're right, the base case is what 6 or 7 trillion, but I think for fiscal 2025 they're projecting spending around 8 trillion a year.
And it could be a lot more. I mean, interest rates could get out of control, and that could easily add, half a trillion there or so. I mean, things can spiral out of control very, very quickly.
And I think that's why inflation hedges at the right price because I don't see deflation being allowed for a very long period of time. I think that's why foreigners are buying our stock market there because they don't want treasuries, so they want like Bitcoin or gold or our major stock market indexes. And I think that's where the capital is flowing when these other central banks cut interest rates and foreigners are looking at our debt problem. They don't want treasuries; they want something else, some other type of asset, like more of an inflation hedge than U.S. government bonds.
Yeah, you're probably right. And I think you also see that with real estate. You go to any university campus, and depending on their percentage of, you could probably almost chart the amount of foreign, Asian students that are there probably correlates directly with the real estate boom that's been seen in that area. And that's probably, frankly, is probably what's caused this massive amount of student housing expansion throughout university campuses and luxury housing, really, right? Nothing like when I went to school. I don't even think I had air conditioning. I was in central Illinois, right? That it's not as it's still pretty warm there. It's not nearly as nice as it sounds. But once you have basically a way for expats to come to the U.S. and and park some money, they start buying their own students, their own kids housing. Well, that puts upward pressure on everything. It starts making luxury student housing look viable. They start building that, and they're probably building it at probably one of the worst times, right? Because I think I think the maximum amount of students we had was a couple of years ago, and I think it's should go down from here for a couple of different reasons.
Well, you also have the Fed keeping interest rates artificially low. And I know real estate developers here in this area, DC Metro area, I mean, they were bragging about all the teardowns that they could do, how easy it was to raise capital from investors, equity capital, or use debt when it was cheaper, and go and buy property, say like an old house that was built post World War II, tear it down and build a McMansion, or go and buy like a one floor strip mall and then go and tear it down, and after you bought the land, the one floor strip mall, and go and build a mixed use building that was what one or two floors of restaurants and retail on the bottom, and then luxury condos on top. And that's like there's been a ton of those tear down boom type of stuff by real estate developers, not just in the Washington D.C. metro area, but all over the country. And I think that's why you're seeing these commercial real estate problems. Is the developers did a lot of this over the last 15 years.
Yeah, and that gig may be up. I mean, I could see interest rates um, plateauing here from a bit, but I think inevitably they're going to rise. And as you obviously know, ultimately interest rates are a function of time preference. But we're talking about treasuries, these other instruments. You are historically you have not, but you're going to start talking about creditworthiness, about credit risk, because that's coming. There's a question of whether or not you're going to get paid back, not how much you're going to get paid back.
Well, especially if China and Japan aren't going to subsidize the budget deficits, because those were the largest buyers. Their central banks were the largest buyers of treasuries for the last couple decades. If they're not the buyers, I mean, who's going to replace the demand there on the treasury supply?
Yeah, you're right. Traditionally had that. I mean, those holdings are a little bit skewed outside of those two. When you look at, I think it's like Belgium, always had a huge percentage because people are using them as a proxy to buy treasuries and hold them. You obviously had a bunch of Arab states that held a lot, but you're right. Japan is not looking at significant growth going forward. China could be in similarly economic weakness, if not outright recessions here in not too distant future. I think that's a real possibility. And even regardless, like you mentioned earlier with Russia, when you have this financial repression that's being done from one state actor to another, they're going to be extremely reluctant. And they've even stated so that they're going to reduce their treasury holdings. So who's the next buyer? There's no one out there but the Fed.
Or the commercial banking system, Chris, because I think, did you see that there was a spike in M2? I don't think a lot of the private sector commercial banks were lending into the real economy, given how like auto loans, consumer loans, credit card debt. I don't think they were loaning into the real economy. I think that money supply growth from the commercial banks, the private sector banks, I think they were loaning to the US government. So I think that money supply growth in the private sector from fractional reserve banking, that was from treasuries. I think they were buying treasuries. The loan increase, money supply increase was to the government, loaning to the government.
Yeah, banks don't mind buying treasuries, right? It's a lot easier than, if you look at C&I loans, the commercial and industrial over the last couple of years, it's been quite a bit flat. It hasn't been, you don't see the volatility I think historically you have. And I think you're right. A large part of that was that it was easy, just go out buy treasuries. Now, I think it was Silicon Valley, when they blew up, I think one of the reasons they cited, obviously they blew up because they had massive amounts of treasury holdings. But the reason they had a bunch of treasury holdings, I believe, is because they couldn't keep up with the amount of deposits that were coming in, right? They couldn't
Stimmy checks,
find.
yeah. So they got a flood
Yeah.
they got a flood of stimmy checks in 2020, and interest rates were still at zero back then. So they bought a lot of treasuries at the lower rates, and then the Fed went and raised interest rates rapidly, and their older treasuries they marked to market the losses. So and then they had a bank run too. So there was people online banking on their app, right? They were pulling cash out too. So there was a within a week they had like I think 40 billion. There was like a online digital bank run, I would say.
Yeah. So banks, you're right. They, instead of being because banks are very difficult to get money from. It is true. I'm sure it's an old aphorism, but you can never get, money out of bank except when you don't need it, right? They're never there when you need it. Well, um, now you have the added problem that they're more than happy to, go buy treasuries. It's easy. There's their mind a guaranteed return. And interest rates are making a little bit more profitable now.
Well, Chris, I've kept you for over an hour. I really enjoyed our discussion. I think we could go on and on and on, but I really want to thank you today for your time, and we'll have you back on again in the next couple months for an update on this. We'll see how things play out with the spending from the government after Trump comes in, if he's able to cut anything or if he surprises us and announces new spending programs. I mean, unfortunately, I think like it's really popular with polling to announce an infrastructure bill, and then the taxpayer return on investments or what they actually, if it's used, if the funds are actually used efficiently, that's a whole nother story, because it just seems like every time they announce an infrastructure bill, it doesn't actually get spent on things that we actually need.
Yeah, well, January, that'd be great to come back. Certainly love to. January should be really interesting. We're going to have new Congress installed. Of course, we're going to have the inauguration. But like I mentioned, we also have the debt ceiling that's now back. And that's going to create some type of budgetary crisis that no one's talking about, as far as I haven't seen anywhere in the news, that's fast approaching.
I think the American people are tired of these debt ceiling fights, and it seems like they don't really resolve anything. They fight in the media. It's kind of like professional wrestling here, where they hit each other over the head with chairs, and then after the cameras are off, it's like professional wrestling actors, and then they're going and laughing about behind our backs and having beers and partying.
Well, maybe that works then, that Trump, was in the professional wrestling circuit for a while. Remember those clips of him like
With the
smashing?
McMahons. Yeah, I think Linda
Right.
McMahon
Yeah.
actually, speaking of which, Linda McMahon, I think, is on his transition team. I think she's one of the five key players, I think I heard.
Wow. Well, yeah. So he knows got to go toe to toe with wrestlers. So we're ready for it.
Well, I think she won a congressional seat a long time ago. I think she was on like one of the Small Business Association committees. So I think he's working with her on that. I'm pretty sure she's on the transition team, one of the 5 or 6 key advisors.
What I just read too, his new chief of staff, I'm blanking on her name, but her dad was Pat Summerall too. So just a lot of
Is it
little famous
Wiles?
people. Yeah.
And I mean, the Republican Trump, that's the first female chief of staff. So I mean, all the stuff the Democrats said about him in public, that he's a Nazi and a misogynist and all this other stuff. I mean, he hires competent women.
One last thing about that, when you literally are saying someone is a Nazi and a threat to democracy, right? This election, democracy's over. And then when you give a so-called concession speech and you're just like, oh yeah, so America's always going to be, the bright spot. And I forget what the exact term she used. Well, how's that possible? Why aren't you calling for a revolution or for us to resist? If you really believed he was that dangerous, then why aren't you, putting out a clarion call for all Democratic congressmen to resist these overtures? But that's what they should be looking at, instead of just, oh yeah, everything's we're democracy, everything's going to be great.
It's proof that they made up more lies and that was spin and that it was what hyperbole. I mean, like the Trump's daughter converted to Judaism and he has kids that are grandchildren that are Jewish. So I mean, to say that he's like a Nazi is ridiculous. So it's just more lies and spin. Both political parties do stuff like this. This is just a rhetoric and hyperbole, unfortunately.
Absolutely.
Well, thank you so much for your time. If my listeners want to check out Windrock, how do they do so?
Yeah, well, we put out everything. Well, first of all, everything we put out was articles or podcasts. We always save them on our website. So please do check out our website, windrockwealth.com, and check out our X handle, I guess you would call it, which I believe is at Windrock Wealth.